Did you know that Starbucks is secretly one of the largest banks in the United States? That sounds completely insane, right? They sell coffee, not loans. But stick with me for a few minutes, because the truth about how Starbucks really makes its money is going to blow your mind. It's a story about financial genius, a little bit of psychology, and a whole lot of coffee. So, let's start with a wild fact. If you were to rank US banks by the amount of cash deposits they hold, Starbucks would be bigger than over 85% of them. In fact, at certain points, they've held more cash on hand than institutions like Discover Bank or the Customers Bank. How is this even possible? The answer lies right in your pocket, or more specifically, in the Starbucks app on your phone. Think about how you pay for your Frappuccino. A lot of us don't just tap our credit card. Instead, we preload money onto our Starbucks card or directly into the app. Maybe you load $20, maybe $50. You do it for convenience, for speed, and of course, to earn those precious stars. You're essentially giving Starbucks an advance payment for coffee you haven't even ordered yet. Now, multiply your $20 by millions and millions of loyal customers doing the exact same thing, every single day, all around the world. What you get is a staggering amount of cash. This pile of customer money is known in the financial world as the float. A float is essentially cash that a company is holding, but doesn't yet have to provide a service for. The most famous example of a company built on float is the insurance industry. You pay your insurance premium every month, but the insurance company only has to pay out if you have an accident. In the meantime, they get to hold and invest your money. Starbucks has perfected this model in the retail space. As of their recent reports, Starbucks consistently holds over $1.6 billion in customer funds on its gift cards and mobile app. Let that sink in. $1.6 billion. That is an interest-free loan given to Starbucks by its own customers. If you went to a real bank and asked for a $1.6 billion loan with zero interest and no repayment date, they would laugh you out of the building. But Starbucks gets this deal from millions of us, and we are happy to give it to them in exchange for a slightly faster checkout and some digital gold stars. This is where the story gets even more interesting. What happens to all that money? Well, a significant portion of it never even gets spent on coffee. This phenomenon is called breakage. Breakage is the industry term for the value of gift cards that are lost, forgotten, or just never fully used. Maybe you have an old gift card in a drawer with $1.73 on it. You'll probably never use it. It's not worth the effort. For you, it's a forgotten $1.73. But for Starbucks, when you add up all those forgotten little balances from millions of customers, it becomes a mountain of pure profit. How much? In a typical year, Starbucks reports around $150 to $200 million in breakage. That's $200 million of revenue for which they provided absolutely no product. It's 100% pure profit. It's like finding a winning lottery ticket you forgot you had, except they find one every single year. It's an incredible business model. You get paid for coffee you sell, and you also get paid for coffee you never have to make. Now, let's compare this to a real bank. If a bank holds your money, it's subject to a massive amount of regulation. The FDIC insures your deposits up to $250,000, meaning if the bank goes under, the government makes sure you get your money back. Banks also have to maintain certain capital reserves, which means they can't just lend out every dollar they take in. These rules are in place to protect consumers and ensure the stability of the financial system. Starbucks, however, is a coffee company. It is not a bank. Therefore, that $1.6 billion it holds is not subject to any of these banking regulations. It's not insured. There are no reserve requirements. They have complete freedom to use that cash however they see fit. It's a regulatory gray area that they have masterfully exploited. They get all the benefits of being a bank, namely, a huge pool of cheap capital with none of the regulatory headaches or costs. So what do they do with all this free money? They use it to fuel their own growth. When Starbucks wants to open a new store, do they need to go to a bank and apply for a business loan? Not necessarily. They can just dip into the massive slush fund provided by their customers. This gives them incredible liquidity and flexibility. They can expand faster, renovate stores, and invest in new technology without having to pay interest to traditional lenders. In essence, we, the coffee drinkers, are financing the global expansion of the very company we are buying coffee from. It's a beautifully self-sustaining loop. You might be wondering, why do we keep doing this? Why do we keep our money locked up in the Starbucks app? The answer is a masterful piece of psychological engineering, the Starbucks Rewards program. Those little stars you collect are not just a loyalty program. They are a form of gamification. Gamification is the process of adding game-like elements to non-game activities to make them more engaging. Every time you load money and make a purchase, you get a little hit of dopamine as you see your star balance go up. You watch the bar fill up, getting closer and closer to that free drink. The system is designed to create a habit loop. The trigger is running low on coffee. The action is reloading your app. The reward is earning stars. This loop encourages you to keep a balance in the app at all times, because you don't want to miss out on earning points. You feel like you're losing something if you pay with a regular credit card. This behavioral design ensures that their $1.6 billion float doesn't dry up. In fact, it keeps growing. And there's another, Even more valuable asset Starbucks gets from this system, your data. Every time you use the app, you are telling Starbucks exactly what you buy, when you buy it, where you buy it, and what promotions you respond to. They know if you prefer lattes over cappuccinos, if you're a morning rush customer, or an afternoon pick-me-up person. They can track the effectiveness of a buy one, get one offer in real time. This data is an absolute goldmine. It allows them to personalize marketing with surgical precision. They can send you a notification for a discount on your favorite drink right around the time you usually buy it. This level of data-driven personalization is something most retailers can only dream of. It allows them to optimize everything from their supply chain to their store layouts, all based on the real-world behavior of millions of users. The app isn't just a payment method, it's a massive data collection engine. So when you put it all together, the picture becomes clear. The Starbucks app is far more than a convenient way to pay. It's a sophisticated financial instrument. It generates a massive, interest-free float. It creates hundreds of millions in pure profit from breakage. It provides the capital for expansion, free from banking regulations. It uses gamification to keep customers locked in and topped up, and it harvests invaluable data to drive sales even higher. This is why it's fair to say that Starbucks isn't really in the coffee business. They are in the fintech business, and they happen to sell coffee as the perfect vehicle to power their financial engine. The coffee is what gets you in the door, but the real product is the financial ecosystem built around the app. They have created one of the most successful and unregulated consumer banking operations in the world, and they did it right under our noses, one latte at a time. It's a strategy that business schools will be studying for decades. So the next time you open the Starbucks app to reload your balance, just take a moment to appreciate the financial genius at play. You're not just buying coffee, you're making a deposit into the bank of Starbucks. Thanks so much for watching. If you found this breakdown as fascinating as I did, make sure to hit that like button and subscribe for more deep dives into the hidden economics of the world around us. Let me know in the comments what company you want me to analyze next. See you in the next video.